Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday, it's September 23rd. This will be our chart lesson for today, and this is going to wrap up our week. No chart lessons on Friday, so um, it seems like this week went by really quick. But anyway, I thought I'd start out showing you the daily chart here, and just as we kind of expected, we made a higher low here, and we've rallied higher. Notice that here's your midline on this envelope, these envelope bands, and notice how we pushed above that, but we closed probably what I would call right at it. Uh, this was about what I expected was going to happen. Will we go higher? I don't know for sure, but a lot of times we rally out here. But just if you just look, if down here when we were making these lows, when it seemed so bearish and so negative and such a problem, if you'd have just bought a little uh, option, little cheap option, way up here out of the money, couple of couple of strike places out of the money with very little time left, and you can see only 3 days we've rallied over 150 points. So that's how you can make some money if you want to play these longer term stuff, because you could buy that option for little or nothing, and that would be the only risk you would have. And buy it when you only got 30 to 60 days uh, left on the contract, so you can get it cheap. So you'd probably want to buy a December contract and make sure it's a couple of 3 or 4 strike prices out of the money. And by doing that, you give yourself a great chance, because once you get in the money, those options will move almost dollar for dollar with the regular market. So you can really use that to your advantage. We don't get a chance to do this very often. I mean, you can see this is the first time we've been down in that really oversold territory. I mean, maybe you do it. Let's go back over here. I mean, you can see since last November, we got down in there, and we got once, twice, 3 times maybe we've been there. But this is only the second time in almost a year that we've gotten down here in this oversold territory. So you don't get a lot of these opportunities. So when one comes along, just keep that in mind for the future. Think about buying you a little low cost option down here. You don't want to buy one of these long shots that are, you got to come all the way back up here to make any money. Sure, we may go all the way back up there, but you can buy well out of the money with a 150 point move, and we may not be done yet. We could turn down, and I mean, we could be rolling over and start going lower, but you would have already had a nice profit here and could have exited and only held that option for a couple of days and been well in the money, and probably picked it up relatively cheap too. So that's how you should do this if you want to do it longer term on a daily chart. That's my recommendation, because your timing has to be impeccable. And honestly, it probably was for a daily chart. But if you had a live contract here, it's really hard when this, look at this bar, how bare, picture that when it was down here on its very bottom. I mean, that bar is just itself. The high of that bar is 44.18. The low is 42.93. So that's over a 100 point bar. And so when it's trading down here and it's very low, it's hard to say, hey, I want to buy here. But that's where your smart traders are going to buy. Only your only lose the only amateurs would be buying down here, or I'm sorry, selling down here. And I bet you a lot of them did. And now the prices are 150 points against them or more. So anyway, I didn't mean to get off on that tangent, but I thought I would mention that. I wanted to show you this chart and kind of just show you that's what we expected was probably going to happen. Will we go higher? We'll just have to see. But every other time we've come down there, we've rallied strongly out of there. So it wouldn't surprise me if we start trading higher again. But we'll just have to see. So anyway, let's go over to the 2000 tick chart and get through that and wrap this week. Okay, here we go. It was a strong uptrend day. We originally had a measured target here, and we were there by 9 o'clock, just shy of 9 o'clock, and we continued to push higher than that actually. So, but this is definitely an uptrend. The blue two-tiered channel looks valid to me, but it looks like we also had a spike up and went into this kind of grayish channel, and even within there, We have the yellow channel in this really small channel here, and once we had a little bit of an overshoot of the blue channel up here at the high, and then the bottom fell out of it and we started headed back. But the market had been so strong we couldn't even get back to the main trend line. So even though this lighter blue channel looks valid to me, and it's probably valid, it didn't help you a whole lot other than to know where to exit up here. It did clue you into where to exit any longs or whatever before you had a correction, but other than that, it didn't really help you a whole lot. You really needed to trade these uh, shorter term stuff, and there weren't a lot of early trades because it just took off so fast, and it doesn't really give you any setup. So unfortunately, not much you can do about that, but that's just the way it is. But let's back out. We'll get through these trades and try to keep it under 20 minutes today if I can. But 7 o'clock came just as we're coming down here, and you can see we had a break and looked like we were looking for a low. We didn't quite get a new low yet. And then you come up, you get a first entry, and you get a second entry. The yellow channel is definitely valid, and you get a break, and we got a new high. So you expect prices to try to make a retest of the low on this, and maybe retest the lows down here. If this might be early on, you could have argued this might be a range day. Found out pretty quick it wasn't, but there's a nice second entry there. It's not a perfect signal bar. It's close to closing in the lower 1/3, but it's questionable. I marked it green. If you took this trade, I'm okay with it. But it's not a perfect signal bar. But it is a second entry short. We are looking for a retest of the lows. The yellow channel has played out, and of course it drops on down and bounces. And I'd draw that trend line there just in case. At this point, you don't have any idea whether it's going to be any good or not. But notice we bounce, and you get a first entry, then you make a second leg up, and you get a second entry short, and it bounces right off the EMA, right off that trend line. That confirms the trend line, gives you a failed second entry short. I like going long there, and if you catch this trade, depending on how you traded it, you may not have got a runner on this one, but if you got a runner on this, that's a great trade, and that's probably all you need today. And it runs on up, and we just get a first entry here with not a very good signal bar. There is a second entry when it breaks higher here, but I don't think you want to take that. It's not a very good setup. You could actually argue to go long right there, but then it's an inside bar. But remember me telling you this little inside bar. We see this a repeat pattern on this multiple times later today. And here it comes again right here. You're working down, you get a first entry, and then you get a second entry on that inside bar. So you may take that trade. It's your stop still has to go below the swing low, which is below this bar, but you may enter on that one. But generally, inside bars are not very reliable, so I'm not crazy about them. But when you start to see a repeat pattern, pay attention to it. And then we run up, we make a new high, and we pull back first entry, pull back second entry. There's a good chance on a trend this strong you'll get 2 legs up, and that's a pretty strong signal bar. I like going long there. Just make sure you got enough room to get out here. You may let it break higher and drop a limit order and see if you can get a little better entry. And I know you could have got at least right at the high, maybe a tick back in it too. So, but it runs up, comes back, and it makes yet another leg up before you get 2 legs back again. And then this looks like a repeat pattern of this little 2-legged pattern with that inside bar. Look how nice that is. It takes a minute, but it would have worked. Remember, your stop always goes 1 tick below the signal bar, and even though this came back, there wasn't really any real heat on that trade. It took some heat because it took a minute to take off. If you didn't enter here, I don't think I would enter on this high or low. It's not a good enough signal bar. I would have just ridden that one out. Runs up, and then, of course, we start correcting back. And I would draw this trend line down here. And you can see I adjusted it there. Let me make a little slight adjustment to it up here. Sorry. Looks like it right there. I didn't quite get it high enough. But anyway, you can see we bounced there. That confirmed it. No setup there really. But if you're just patient, in a few minutes you come back, you get a first entry, second entry. There's that inside bar again. We saw it here. We saw it here, here, and here. Still aggressive. So I marked it green, but if you see the repeat pattern, by all means take it. Come back first entry, second entry, and you could almost make the same argument here, especially when it broke lower and turned up. So it makes it a little different because it didn't break above it. It turns down first. But you could argue that that's a failed second entry short. It doesn't set up like a reversal or anything. So, and it's definitely looking congested. So I didn't like that one. But if you wait just a minute, you get a new high, first entry, second entry, and you can see it right off that trend line, a second entry with a great reversal signal bar. I mean, it opened here, traded way down, then fought all the way back. If it breaks higher, we're going higher. And there it goes. And then you get another second entry back, another second entry long. And then you get notice there's a new swing low here. And so you get a first entry, second entry. So there's a failed second entry short. And that's about the third time we've got into the upper side of this, above the midline here. And so if we break above there again, we're probably going higher. There's actually a higher low right here, but that's a double top and not a perfect signal bar, and you're way away from the EMA. So I think that one's too risky. Of course, we run up. We turn down right off the main trend channel up there. We did get a little overshoot of this gray one, and then suddenly it's reversing here. This actually looks close enough to a failed second entry long that you may take it. Notice how we shot straight through the EMA and we tried to pull up. We never broke higher, but we tried to go up there. It's just too bearish. And then when it comes back, when it turns down there, I didn't mark it, but if you want to take an aggressive trade, that's one I like. If you went to a little smaller chart, you'd probably see a break higher and a true failure there. But that looks like one to me when you're expecting one, especially with this overshoot. And the fact that we broke right through on the yellow. The overshoot up here on the yellow and the gray could lead to a reversal. A lot of reasons to like that one. Of course, we run down and you come up and you get a first entry and then it turns higher. So when it breaks lower right there, you get a second entry short. I like that one too. We run on down and you get another second entry short, and look how bearish that bar. You can't use that as your signal bar. It's just not good enough. But that one's really bearish right there. And it drops on down. Probably wouldn't have got a runner on it, unfortunately. This one you would have got a runner. We make another low, first entry, second entry. Now notice this one. I just marked this one green. It's not back to the trend line. But it is a second entry short, but that signal bar is not good enough for a second entry short. But you got a double top up here, so that's a new high. So you might argue that that's a failed second entry long and then take it. I don't think I would take that as just a failed second entry long. But with the second entry and the strong sell-off here, you might take that trade. It's still aggressive. I'm only going to mark it green, and I think it's one that you'd probably be better off to leave alone. But there's some reasons to like it. Sometimes those will trap people and take on off. It would have been a nice, easy trade, but you wouldn't have got any runners out of it. You make another new low, and then you get a first entry, second entry, and this one turns down right off the key entry point. There's been no break yet. This has been a fairly strong move down. I only made this one green because it's very late in the day, and it looks a little congested there. So not a perfect setup, but it's one you might take if you want to be aggressive, especially with the way it was selling off right there. So anyway, I'm going to wrap it up. I'm not going to beat around the bush today. I'm going to get this done in 15 minutes. So pretty good trading day. You had to be a little patient early in the morning, but there were some nice trades this afternoon and fairly decent trading day. The market's reversed off of its oversold and it's looking much better than it did a day or two ago. We'll see where we go from here tomorrow and into next week. But I'm done for today, and I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.